Let's take a look at the pros and cons of a health spending account as compared to a traditional health core plan. It's definitely better for flexibility, more popular among employees, some employees though, so we'll get into that. Some might take more proactive steps to improve their health with less rules, meaning more frequent dental cleanings, physio, or so on. More money towards mental health, such as psychologists, social workers, or psychotherapists. You can also spend dollars towards a personal spending allowance, such as yoga, fitness, or sports, but it is important to recognize that these are taxable benefits. The cons. Depending on the carrier, we find most carriers will actually require that health spending account balances are paid on a pay-as-you-go basis rather than budgeted rates. So this is key because if a company is used to getting a health benefits invoice every month of $10,000 fixed, you're fixed for the year, and at the year it could go up, could go down too, but most of the time it does go up. Then that's completely different from having a bill every month that comes depending on your balance. So if that $10,000 amount is what you're used to, there could be a couple months where it goes down to $1,000, which is good. But there could be a couple months where it doubles to $20,000 just because maybe you're close to December 31st or January 1st, where we see typically 4 or 5 times the volume of claims coming in than during the months of June or July. So if cash flow is important to you or the client, then that is going to be an important consideration. It's also possible, when we said it was more popular among employees, it's possible that, I put the number 5 here, but really X number of families will complain that they don't have enough money compared to the previous plan. Because again, you had to take money away from somewhere in order to put money in towards a universal flexible health spending account. So, there is pain associated with this. There will be pain with the old approach meaning just core traditional, and there will be pain with the new approach. You're just going to have different pain. So you're going to have different complaints, different complainers, but you could still get complaints. So it is important to recognize if you're doing this to satisfy your employee population, that's great. It's also important to try to cut out some of the noise, not all of it, of course, because if there is legitimate concerns because of someone's health and their ability to live and spend, then absolutely that's important. However, if you're getting complaints because, we used to have more money on massage and now we have more money on massage, then you just have to take that with a bit of a grain of salt. It is also interesting to know that some carriers have defaults for whether the money rolls over or not. So meaning most of the time the default will be that the health spending account balance can roll over to the next year. And that's a CRA rule. That's a Revenue Canada rule that actually allows that to happen. It cannot roll over more than that 1 calendar year, however. Or you could restructure it to be use it or lose it by the end of the calendar year, which actually what traditional core plans have. So it's just important that if you did choose the rollover, then that just means that the entitlement accrues for longer. And in terms of the lumpy cash flow on your balance sheet or your income statement, it could be a larger hit to the company when people do spend it. Also, it is easier for people to spend it all upon termination. So if your company is going through a lot of change, you have a lot of churn or turnover, maybe you're going to do a large layoff soon. Well, the benefits law in Canada, and especially where we're recording this video in Ontario, does say that you have to extend benefits 1 week per year of service during the notice period, in line with the amount of money that you pay in lieu of notice. So therefore, once you terminate someone, you have to allow them to access their benefit plan. So even if they've been working for you for like a year, and they're entitled to a week, and you're going to give them the minimum, they've still got a week to spend. So if that money is more flexible, I can spend it all on, buying couples massages or, buying glasses or just absolutely spending it. However, in a core plan, it's harder because you do have limits on that. So, you might not necessarily have that in that situation. It also could be harder to collect premiums and charge employees, because if you're trying to do a cost share where employees pay part of their paycheck towards benefits and you don't have a fixed monthly rate because you're in a pay-as-you-go situation. Now although it's harder, it's not impossible to do. You can do it. It's just more work for your team to calculate that and to administer that. And it also becomes important when you think about the tax perspective, because if you're deducting dollars away from employees from their spending account and you have some of that money in personal spending allowances, which are taxable benefits, there's just more money lost in taxes to the employee. So if you care about that, and I think it is important to think about the employee's wallet, that's just a huge consideration. And then here's the thing. I mean, it's, the con is it's hard to force people to go to the dentist if they can spend it all on massage. So while we said it was a pro when people take more proactive steps to improve their health, you can also look at the other side. You can say, well, if I'm hired in January and I'm getting this entitlement for the year, and in June I spend it all on massage, but then in November I discover that I actually have a need for a root canal and need $2,000, sorry, like you're out of luck. Now you're going into your own personal money, your after-tax dollars to do that. So these are all of the things that we see that clients or advisors might not necessarily see. So it is important that if you're a client listening to this video, to talk to your advisor about all the pros and cons and to think carefully about what matters for your own business.